Ever stared at a pile of unpaid invoices wondering how you'll explain another assessment to your neighbors, or watched a maintenance project get delayed again because the money just isn't there? If you're nodding right now, you're not alone. For most HOA and condo boards, financial headaches are the number one source of community conflict. And today, we're looking at the three key principles that really separate thriving communities from struggling ones. These insights will help your board make smarter financial decisions with greater confidence. First up, think of your reserve fund as preventive medicine, not emergency care. Too many boards only worry about reserves when disaster strikes, but by then, it's already too late. A well-funded reserve account should cover a substantial portion of your anticipated capital expenses, but the reality? Many associations across the country are running on seriously underfunded reserves. This isn't just about numbers on a spreadsheet. It's about avoiding those painful assessments that blindside your residents and create neighborhood drama. So what's the solution? Get a professional reserve study done every 3 to 5 years. And then, here's the important part, actually follow it. Communities that consistently fund their reserves based on professional recommendations almost never have to hit their residents with a surprise assessment. Remember, these regular reserve contributions might feel like a burden now, but they're nothing compared to explaining to your neighbors why their assessment just doubled overnight. Second key principle. Financial transparency isn't just about checking a legal box. It's about building trust that pays real dividends. When homeowners don't understand where their money goes, they're naturally going to question your decisions and maybe even delay their payments. The data backs this up. Communities that share regular, detailed financial reports see significantly fewer delinquencies than those that keep things vague or report only once a year. So, how do you make your finances more transparent? Well, it's pretty straightforward. Send regular updates about major expenses. Clearly explain any budget variations. And use simple visuals to show where assessment dollars actually go. Some associations have seen dramatic improvements in collections just by creating monthly "Where Your Money Goes" email with simple pie charts and project updates. Being transparent isn't just the right thing to do, it directly impacts your bottom line. Third principle might be the toughest. Consistent collection policies protect everyone. When you make exceptions for one homeowner, you're actually creating problems for all the others. Yes, every community has residents facing tough times, and compassion matters, but inconsistent enforcement ultimately harms your entire community. Each exception creates a precedent, delays necessary maintenance, and shifts the financial burden to those who pay on time. Completely unfair. Here's the tough question to consider. Would you, as a board member, personally pay another resident's assessment out of your own pocket? If not, why would you make that same financial decision with all of your neighbors' money? Making exceptions might seem kind in the moment, but you're really just forcing other residents to pick up the slack. The better approach: develop a clear written collection policy that includes specific timelines and notices for actions. Standard payment plan options everyone can access. Consistent late fee enforcement. Then stick to it. Communities with standardized collection processes typically recover significantly more delinquent funds. Fair, consistent enforcement creates more financial stability for everyone. So there you have it. 3 key principles that really make a difference in community finances: smart reserve planning, clear transparency with your homeowners, and fair, consistent enforcement of your policies. The beauty is how these work together. Good reserve funding prevents those emergency assessments nobody wants. Being transparent about where your money goes builds trust and actually improves your collection rates. And when everyone plays by the same rules, the whole community benefits. Bottom line, when your board embraces these principles, you're setting your community up for financial health today and for years to come. Your residents will thank you for it. If you found this perspective valuable, we invite you to connect with us. Facebook viewers, like our page and follow us for regular updates. Feel free to message us directly with your questions or community challenges. Instagram viewers, hit follow and feel free to DM us with your questions or community challenges. YouTube viewers, subscribe to our channel and check out the video description for helpful links. Visit our website to discover our thought leadership content, books, and resources that can transform your community management approach. Whether you're dealing with the challenges we discussed today or other community issues, we're here to help. Thanks for watching, and we'll see you in the next video.